Today proved to be a very volatile trading day, with S&P 500 moving in a range around 100 points after yesterday's sell-off. Being a trader, you have to emphasize the importance of not being biased and focusing on one direction, simply because the opportunity to miss on one side versus focusing on one is just too much. Having the ability to adjust your strategy is vital. And today we're going to be talking about the key trades that set up our success, and also focus the most important thing in trading, which comes down to risk management. A lot of people don't put emphasis into risk management, but we at the STX Mentorship program do, because it doesn't matter how well you are at charting, technical analysis, or reading option premiums. If you cannot manage your account effectively and you don't know what your bottom line is, then you're trading blindly. And that, for a fact, is what the key reason why most traders end up failing. So in today's video, we're going to emphasize on risk management. We're going to give you an idea about premiums that gave us an idea where there was going to be a market rotation using our model based on the information that we provided. And also we're going to give you a little bit about a prediction on what's to come moving forward. So let's get straight into it. Currently, what I use to help me manage my risk is my spreadsheet that you guys often see me look into over here. Now, I am very transparent where I show all my entries and my statements to my members. But when you are trading, the biggest problem you have is that you don't really understand the strategy of each trade that you're getting in, number one. Number two is that you don't know what the bottom line is of your overall P&L. Yes, you could look into it and dig a little deeper in your statements, but the problem with that is that you're spending time looking into it. I plug everything into my spreadsheet that I have that is personalized for my members, where they know exactly what the strategy I have going into the trade that I'm going into. Is it a lotto? Is it a scalp? Is it a swing? What is the plan behind the trade? And that comes down to a very important part about risk management, having a plan. Okay, if you don't have a plan, then you guys are gonna end up selling a trade that was meant to be a long hold into one that you miss out the opportunity. So if your plan was to hold it, then you want to declare that on your spreadsheet, and that's something you cannot do on your broker statement. Second thing that your broker statement does is that this helps me avoid FOMO. Now, the biggest thing when it comes to FOMO is that you're looking at your cash account. Some people do, some people don't. I look at my cash account, and the cash that you have available to trade is the lifeline of your account. And you need to understand what your overall P&L is during the entire month. What will happen if your trades that you're currently holding go to zero? What are you left with? This is very important to know. How much profit you have if you're left with. What a lot of traders do is they don't know how much profit they had the entire month. They only look at their cash. Okay, so if you don't know how much profit you have, how do you know if you're playing with profit? You're just looking at your cash and you don't have that memory knowing how much cash you first started off with. Sounds a little bit confusing, but a lot of people get this mixed up, the numbers mixed up. Because let's just say you had $20,000 at the beginning of the month, right? Midway through the month, you're up $25,000, but you can be in $6,000 worth of trades, and those trades, those swings that you have, may appear on your broker statement that you have a large account, your P&L's up, so it's confusing. That's why what I do here in my statements is I make sure that every trade that I go into is declared a zero until I sell it. And this really helps me because all these active trades that I've decided to take here, they are open. So they have the opportunity to come back or even make me profit. And there's a reason why I took them, because I want to swing them. So At the end of the day, I know that if everything goes to zero, I'm still left with 44,000, and that was my overall success based on the entire month. Now, every account is different, and the way everyone trades is different, right? I have a medium-sized account that I can trade I usually go for 10 to 20 contracts. My recommendation is that you shouldn't trade more than 10% of your overall net cash. So if you have a $5,000 account, for example, you do not want to trade more than $500 per hand, okay? You want to divide that 500 up and trade that amongst many different ways, because if you do that, it's going to be a problem going forward. So it's important to do that. I do not exceed over 20 contracts per hand because it makes me feel comfortable trading that limit. If I go beyond that, then it goes a little bit about my risk parameters. So that's the first thing you need to really set going forward. Now let's talk about the trades that we did. So we called out a lot of amazing trades for today. In the room, we started off by pretty much giving a lot of bearish plays. One of our top analysts that's sells, he managed to really call out AMD, Microsoft, SMCI puts, and they all did very well. Okay, this is his chat room that you see right over here. He's part of our analyst group, and he called out all these trades. He gave more input on the pricing in the main trading floor, but this is where he pretty much does that. So I already had put swings, and I kind of missed the entry on that, but a lot of people in the room caught that on early on. Now I also warned everyone about a potential pop that could happen in the market by looking at the premium. So we worked together by finding these key opportunities. So in my market sentiment report, which comes out in the beginning of the week, I basically give the premium points when SPX reaches a certain threshold. So in this example over here, I said when the 55.85 call reaches above 45.5, when the 54.25 reaches that point, it's going to be a very tough level to break. Now, if we go to our premium monitoring right over here, this is where I analyze premiums. You can see my level 3 bearish weekly just hit that point. This is a 54.25. Literally, it was a couple of points off, and that's when the market had a major reversal. Okay, that also aligned with my daily levels. So if you go back into my chart over here, our daily levels were given here at 53.91. So when the market opened up today, it had a massive dive. Let's look at this from a 30 minutes. So when the market opened right over here at around 9:30, it dropped all the way to this point here. It had a low around 53.90, so slightly below our level 1 bearish. This is where the market started to really pick up, and that's when we gave all these call plays. I mentioned in the room significantly that the market may rip. We talked about it on Twitter as well, and we even called out on Twitter that the SPX could fly at that significant point. So right off the money right there, we really called out the market perfectly, as you guys can see right there. Okay, so this is our Twitter feed where we give constant live market updates and analysis. Now the main analysis goes in our Discord and our main chat room, but this here is a good way that we can kind of explain our processes when it comes to explaining about premiums. So we mentioned over here that SPX could see an insane bounce once it hit our level 1 bearish, which I kind of spoke about as well. Now level 1 bearish is our gatekeeping range and pretty much tells us when SPX can is likely at a very strong support. So normally when this level hits within 30 to 1 hour about market open, you can either see a rejection or a pop through. So in this case, we see a massive pop. We spoke about it in the room that a massive reversal can happen if we break through 54.45, that we can see 54.75, and that other stocks that are likely to move is ARM and NVIDIA. We crushed it with many plays like STX, NVIDIA, ARM that all start to really fly here. We gave this SPY 546 call from 40 cents. It went up to a high of $3 today. So that was definitely a nice trade that we called out. And we spoke a lot about the premiums, about how it works. We also mentioned that when SPX 5490 call hit 10, that's when the massive reversal started to actually happen. And we kind of called that out earlier in the chat room today. Now, a couple of stocks based on our prediction, which we see right over here. I personally believe that SPX, the premiums are showing that this massive dump that you see right over here was a closure of contracts. Most likely, I believe, with the core PCE that is coming out tomorrow, that S&P 500 is likely to open in the green. Now, I personally believe, based on my analysis, that we could probably see 54.75, and we have the opportunity to test this 50-day moving average, which is at 5,500. So in the short run, I give it to the bullish side of things, but you definitely want to be very careful here because the market is starting to get very choppy. Now, in this beginning of the week, I called out that the top of the market was at 55.85. So with Friday being the last day here, if the S&P 500 can get through this 5,500, then I'm pretty confident that we should see a retest at 55.30, which would be a higher low for the S&P 500. Now, other stocks that we're going to be talking about today is NVIDIA. Now, NVIDIA is a stock that pretty much declares a movement here. It hit near my estimated weekly low. We made money on the puts off this, by the way, as well. So we made a massive trade on the puts early on, right throughout the day. Where was that? So we got an 80% trade, $3,300 that we made off this NVIDIA puts earlier today because we wanted to tuck it down, but we knew that this level was going to be a very hard resistance point. So we sold it around here, and NVIDIA started to pop massively. I didn't take calls at first. I wanted to see if there's evidence of a rebound, but normally I do to play around supports over here. Some people actually did and took profits right off that massive bounce. AMD pretty much broke down near our bearish breakdown range. It does look like it can possibly hit 135 still, but I would not buy calls on AMD at all, because every pop it still gets sold off, okay? And this stock here has more downside room based on my model here. There's more downside potential that you can see right there. And then SMCI, you can see right over here, hit my level 4 bearish, which is my extension, when the stock hits 700 right over here. So hit this level and then blast it off and start to run again. Okay, now I want to emphasize all these predictions. This is my weekly chart, not my daily chart, but this is my weekly chart where I give on stocks. It's all given at the beginning of the week. I've shown that numerous times. So if you guys look at my other recaps, you can see that as well. So just keep that in mind. Now that it hit my estimated weekly low, it's very possible that I believe SMCI can go to 742. Now the problem with SMCI is that it's going to be very volatile, because the reason why it opened lower was because they announced their earnings date, but they didn't pre-announce their earnings. They didn't give any massive guidance. Now, if they did, we would have seen a rocket on the stock, but now a lot of traders are believing that they're going to do bad on earnings, and that's going to be a key risk element for the stock here, okay? There's also rumors of a potential cooling issue with many of their memory chips that we're looking into, okay? So that's important to remember. Dell is also showing signs of weakness, where it looks like it broke below my 113 estimated weekly low, and it looks like it may hit 109. If it breaks 109, we could probably see 104, but I want to see this rebound here. Not really playing this for now. And ARM hit our estimated weekly low right on the button here. at 140. This was a perfect opportunity. You can see that right over here. The low of the day is exactly at 140. Okay, if I scoot over here, low of the day 140 to the penny that we call that out. And as a confirmation for everyone that is a critic, I will go here, find my ARM analysis. So as you guys can see, this is made at the beginning of the week on the 27th. If you edit anything on Discord, it will pretty much give you a stamp. So you see right over here, estimated weekly low was 140. It was given on the 20th, so on a Saturday, and you see no edits whatsoever. You can see my chart here as well, and I pretty much said 140 is what you need to look for. Okay, the way I develop these levels is simply off my model by analyzing the gamma levels and coming up with a estimate in terms of where it can go. Other stock that I'm looking at right now is Tesla. Now, Tesla pretty much struggled to break below this 217, but it showed a lot of strength earlier in the day. So what we're looking to see is Tesla hitting 229. I noticed that the 230 calls were at 50 cents. They jacked the premiums. So it's pricing in a move to around 236, 234. So let's see if that can possibly come out. You know, it went red on earnings. So we want to see if it can come back, and it's still in our bearish breakdown range here as well. And Microsoft, we're watching carefully as well to see if the stock, it's slightly below my estimated weekly low. So I may decide to pop, but Microsoft had a lot of bad news with, you know, the whole CrowdStrike situation. And that is really impacting the stock. Speaking of CrowdStrike, it's below my estimated weekly low. So I think this stock may go to 242 possibly by tomorrow. When it first hit this 260, it had a massive bounce. As you guys can see, it bounced all the way to around 270 close to. So the first high was around 265. It bounced off. Sorry, it was right over here. So first time it hit it right over here, right? You see a massive bounce right to 276, and then it worked its way down again. So it's very possible it can go to 242 possibly by tomorrow. So I hope you guys enjoyed this market recap, and it was very refreshing to get all this information. My mentorship program, you get access to early predictions. You get access to my school, my STX University, where I give courses on how to read premiums, what to look for, how to set up your watch list, how to look at these charts, and how to analyze key details and inflection points on premiums. And you also get access to one-on-one coaching. It is $200 per month, but with a 50% discount, gives you a great opportunity to really check my community. If you guys don't have the budget for that, or are simply not trading right now, then join my free Discord. Costs nothing, you just have to sign up. But when you get access to the key details and this analysis, we help you become a better trader by helping you with your risk management, you know, through our coaching, how you can do that, and analyzing premiums. I've been very consistent, and I show all my trades and all my trade logs. So I hope you guys can look into that, use your own trading style, and we can work together. I'm trying to build a very strong community, and so far it's looking very good, and we look forward to assisting many in the future. See you guys in the next one, and like always, let's get that money.